Life's too short. Get out of your head, make a better life instead. You gotta give it all your best. So put your hands up to the sky and live your best life, alright. Don't just let it go by, just try, oh my. Got only one life, got only this time. We gonna get it right. You gotta let go of those who don't belong in your tribe. So cut the bad out of your life. Yeah, do it one time, one time. You gotta work till you're winning. Yeah, take control of the system. When you invest, it's addicting. No time to rest, let's go get it. Not gonna stop till I'm finished. Not gonna drop to my limits. Deep in my chest, I'm inhaling. Believe in testing and failing. You gotta flip every.
Hello Internet, this is Marko Yamashita. I am so happy to be back live with all of you, whether it be by VOD or live stream or in chat or lurking. Thank you so much for all the support that you guys have shown for the last couple of weeks as I was taking care of some personal things and could not stream or do live talking about things that have been going on with the VTuber world. What I would like to also say is there was a huge influx of people who came in and they really enjoyed a lot of content that I was putting out there, because I was bringing a proper perspective towards information that is currently out there, or information that was being misrepresented by other people. So I appreciate you guys subscribing. Make sure you hit the like and subscribe if you enjoy my content. I try to do my best with what I have. I research everything by myself. I present it by myself. I create most of the stuff by myself. So there you go. So what we are currently looking at right now is we are currently looking at the stock price for any color ink. There is a approximately 15% or rather 15-minute delay between when the stock price gets posted to I guess websites that monitor the stock prices and everything like that. So it did look like there was some pre-market action here with the stock that I just happened to notice right as I was going live here. If you notice that with these three bars down here, this is a huge influx of people that are buying any color stock. And this, let me reset the, there. Okay, so, this here, what my understanding is of how the Tokyo stock market works is that they will accept, purchases of stock after they close at 3:30. However, it won't be posted until, the beginning of the next business day. So my belief is that this is probably investors or people who saw the earnings report and went and bought the stock itself. Now obviously we're not getting any indication that the stock is currently moving. So what we're going to do is we are going to keep an eye on it until the live or the delayed live amounts start pulling in. And what I would like to do right now is I would like to move over a little bit to something that I have currently been working on. I didn't get a chance to release this particular presentation. I just plain ran out of time before things started happening here. But what I would like to do is, while we keep an eye on that, and we will keep an eye on the stock price here, is we're gonna move over to this, as we are currently watching the stock price here, this I was putting together Any Color Inc. forecast predictions. These were not predictions by myself personally. These were predictions by professionals who are they do this stuff for a living. They watch stocks. They make, have different tools and instruments and all sorts of other stuff that they do to try to figure this stuff out. And I found some of their information extremely interesting, and we'll go through this as we're keeping an eye on the live or the delayed live stream of the stock price coming in. Now, the expected Q2 financial report, which we'll go over in a lot more detail here shortly, this is the percentage breakdown of what Any Color was looking to do in order to diversify their income to meet a ever-growing need for investment and revenue. All right. As you can see here, they are purely looking at 16% of income coming from live streaming. Now that is significant because when you listen to other people out there, especially the otter people, I call them, I have my own little nickname I call them. STYs, those people, they have just gone completely ballistic and bonanza over the fact that, Any Color is not focusing solely on streaming. That's not their pillar of revenue. It's one of them. However, they're actually getting more revenue out of promotions and putting their IP out there than they're doing with live streaming. And to that kind of trade-off, you have the talent that doesn't need to live stream because they are working on a promotion agreement from Any Color to a company. That there's absolutely no need for them to be streaming when they could be making just as much, or even building longer contracts with other companies because they're using their IP through promotion. All right, that is what the pillars of the financial results. That this is what they want. This is the framework. Okay, now. If we go to the Nikkei has a subdivision called Quick, and they do forecasting for all the stocks that they have on their index and everything. As you can see on the screen here, you have the actual results from last year. Then you have the company forecast for this year. It's at the 12-month period that they're looking at, and the quick consensus is they're still looking at Any Color not meeting that forecast, but they're going to be largely what they call in line with the forecast model that they're putting forth. Now, obviously, people are going to sit there and say, oh, well, they didn't meet their goals. And it's not a goal, it's a forecast. You're not going to get a gold star for hitting a specific number. What's more important for Any Color is this percentile breakdown of their 4 pillars for financial income, as opposed to meeting a specific number in a forecast. As long as they have a productive, positive business model that is bringing in money close to what is being forecast, as long as it's within line and the averages play out the way that they're supposed to, it's called in line. It's not a miss. People look at it and say, oh, well, they didn't make that, they didn't make that number, so it is a miss. And just because they miss a forecast, it's kind of like the weatherman. The weatherman says it's going to be 91 degrees outside, and then when you go outside, it's 97. Does that mean that forecaster was through a miss? No, he's guessing based upon the best available data that he has available to him. So that's extremely important. Let's take a look back at the let's take a look back at the market, and we'll see if the numbers have. So the numbers still have not come out yet, so we'll continue on with this particular portion of things while we are waiting. So let's go ahead and move along to. Okay, so moving along here. So looking at the investor sentiment with any color in regards to people who are buying and selling stocks, you have people buying on margin. Basically, they are taking out a loan. They have a certain amount of cash on them. They're taking out a loan. They're paying part of it with the loan, and then they're paying the other part of it with their own money. And they go buy a stock. That stock goes up in value. They sell the stock. They return their loan. Then they keep whatever interest that came along with it. Right. So we haven't seen a dramatic increase in any color, people buying on any color on margin for them. Now there has been upward movement, as you can see here, from the 25th of October all the way till now. There has been a steady amount of people buying on margin, but you also have a lot of people who are also selling their stock at the same time. So there's not a one-to-one trade-off. There is still close to 3 times the amount of investment that has been paid on margin for any color. However, this trade-off is nowhere near how Cover Corporation was before their Q report dropped. Now, that's not to say that things can't change, and that, you know, as time has gone by, you know, maybe something happened in the last 24 or 48 hours. A lot of these numbers, they come into us late, or they're published late. This particular number is only published every 7 days, and a lot of times, you know, 7 days has gone by and it still hasn't been put up, and then they put it up like 8 or 9 days later. So I don't know what's up with that. But anyways, so let's move on here. So now, short stocks, short selling, and people buying shorts has been a really fascinating case study in how people can expect a drop in the stock, and then suddenly something happens and it shoots way up. People are trying to cover their short stock investment. With short stocks, basically what you're doing is you're buying a stock, or you are actually borrowing a stock from a broker, and then you are selling it at a specific price because you're expecting the price to drop, and then you buy back the stock at a lower price, and then you return that stock back to the broker that you bought, you originally borrowed it from, right? Now, once Cover Corporation put out their Q2 revision, the short sellers were going bonanza, and that's why we saw the huge amount of increase of their price even before their Q report dropped, because everyone knew it, you know, they overperformed. So that is not something that has necessarily happened with any color, and primarily because any color seems content with, you know, we put out a plan, we have a plan, we're going to keep on this plan, we're not changing anything. That's the way it's going to be. So there's been a lot of kind of anticipating what's happening with you know, what the Q report was going to be. There was a lot of people that were kind of, you know, just kind of wanting to play a wait and see game. That, you know, there was not as much short selling as you would normally see if you were going to expect a short squeeze coming out for a company that has a key report that's going to be dropping. Now let's take a look back over. Have you done anything yet? Now, I do want to remind you that back in July, when their report came out, they actually halted the stock trading completely for any color because it spiked up over 25% within the first hour. Now we're not seeing that yet. We don't even have numbers that have come in yet from the delayed feed, but we should hopefully be expecting that here pretty quick. So let's kind of go on here with this. All right. So the shortfall, which when I originally created this Q2 report had not come out yet. This was prior to that, but the shortfall, any color needed at minimum 10,564 million yen in order to reach your Q1 forecast. Now, obviously, they did not get to that specific number. They came close, but they came close more towards the internal projection forecast that they had of the 10,070 million yen total, and they fell short of that as well. Now, it plays out like this, though. When you look at the breakdown, we'll look at the breakdown a little bit later, that they were largely in line with what they were trying to forecast. And in fact, there was a bit of an inverse type of scenario where things literally just swapped places. That if you look at it, and I'll show you guys this in a bit, if you look at how things were handled and how things moved around, basically if you take last year's numbers and you take Q2 from last year and put it in Q1, and you take Q1 and put it in Q2, that's exactly what we saw this year with them. It's basically like they rotated the distribution of what they were trying to achieve with revenue and with profit and production and selling, and they just swapped Q2 and Q1. I mean, that's basically what it looked like. So let's see, come on here. Okay, so we do finally have some movement here, and we'll put this up here just for a bit. Let's this up 5 minutes. Okay, so let's take a look at this here. Oop. And all right, there we go. Oop. Give me my window. Let me click my window. Thank you. Okay, so what we are seeing right now is we've jumped up 1.42%, which is not a bad start. It's not a home run type of number that you would see, but when you're looking at the way the stock has started for the day, this is what they call gapping. You gap up. You had your numbers from the day before. The end day happened. End of trading happened at 3:30, and then when you open up for the next day, this is called gapping up, which is a positive sign, because that means that there is a strong demand for the stock itself. And I want to try to get this window so it's not scrunched. Why are you coming so scrunched? There we go. All right, so we'll go day 1. Okay, day 1. Okay, so as you can see here, there was some big time buying here at the start of today. Let's do. Now, it does look like there's already some downward pressure, but a lot of that could be from short sellers that are trying to abandon ship now before it gets too high, and they have to buy more just to cover their own their own investment. And that's a whole different ball of wax there. You can see that there is a ton of pressure that is coming down with this. This line here is called the wick, and this line basically represents the motion that of how high the stock has gotten for this particular time frame, which is a 5 minute. Yeah, 5 minute time frame. So there is definitely some upward momentum and pressure here. Let's look at a couple of indicators here. See, now there's a bunch of downward selling here. This typically is shorts that are trying to get out of their investment before it goes too high, and we're likely going to see a bit of this waffling here, this tug of war here, because there was not as many shorts as there was last time, or not last time, but for Cover Corporation, and so we're likely going to see the shorts continue to play this out for and until they either run out or they give up on it. But let's look at some of the indicators here, okay? Because I do want to throw out some of the indicators here to kind of represent and give you guys a bit of an idea of what I look at when it comes to stock trading. So two of the indicators I typically use is the staunch RSI, and then also the volume oscillator. And the volume oscillator basically tells you just how much movement is actually happening within this particular trading frame here. And as long as it's above 0, that basically is a sign that there's more people buying than selling. Once you get below 0, that is when if you're holding stock for that company, you should really consider bailing out. Now, this particular place here, you see a lot of purple between these numbers. This is basically where you have it, like your cruising altitude for this particular metric. You have two lines here. One's called the signal line, and the other line is there to represent whether or not that there is positive selling going on, and if it goes above the signal line, that basically means there's upward momentum. If it goes below the signal line, that typically means that the stock is in reversal and heading back down. Now, as we see with it coming back down here, the lines are starting to go down from this white part back into the purple. Once you get to, most stock investors look at this as, once you hit 80 on this particular they call them studies, some of them call them tools, whatever you want, device, whatever you want to call it. Once you hit 80 here, and the number, the lines keep going up here above 80, that's when you have to start worrying about it being overbought. And when people look at it as being overbought. That means it's typically the amount of buying within this particular time frame is slowing down, and more people are trying to sell than buy, and so it'll dip back down. It can go below the purple line here too, down to 20, and once it gets below there, as long as there's not any negative type of as long as there's not any negative type of news, or I guess news would be the best thing that I could say for it. As long as there hasn't been any press releases, or as like saying that there's a lawsuit against the company, or that the company has released a press release saying, yeah, we're lowering our forecast, or we're in financial trouble, that kind of thing. Most of the time, that's when people start looking at whether or not they want to buy the stock, because it's down there at under 20%, that 20 marker there. So as we can see, Anycolor has not had that big bump with this particular Q report. It doesn't mean it can't still happen. However, it does look like, at least for right now, that Anycolor, with their report the way that it was, basically means we're holding the line. We are basically going to keep doing what we're doing right now, and we are going to try to do something internally in order to make things better, so we can hit those forecast markers in a better fashion. That's pretty much what it's looking like right now, unless there comes along and there's some huge amount of buying that we haven't seen. And I mean, it's 30 minutes till the top of the hour. I don't think we're going to see the same amount of buying for Q2 as we saw for the annual report. But still, for right now, the stock is 1.63% above where it was at the beginning of the trading session. So we will continue to keep an eye on it as we move along here. We're not going to go away from this, but we are going to swap back. And what we're going to do is now that the chart is displaying data, we're going to switch gears here a little bit, and we're going to go to the Q2 post Q2 report that I have drawn up for you guys, and I think you guys will find it pretty interesting with what I have put together here. So let me just do one thing here. I just want to kind of move myself out of frame a little bit more. So, all right. So, Q2 report, post Q2 report. This is we're gonna call it a post-mortem, because we're gonna see, we're gonna look at objectively and say where things went wrong, where things went right, what I will try to warn you as we go through whether or not I'm giving personal opinion. So we'll just kind of keep an eye on that, okay, and make sure that we are not mixing opinion with what the data is showing you, okay? So let's go ahead and get this rolling here. So basic overview here. This report is we're going to go over the forecast, what the results were, current stock price. We are keeping an eye on the market reaction. And we're going to look at what the forward looking is for the company itself. We will be covering a couple of ratios and proportions and percentiles. It's like we did at the top of the show here today. We'll take a look at their business model, and we're going to look at the stats versus the value, and look at whether or not people are overreacting or underreacting to those specific things. Okay, so when we look at the sales numbers for any color, the left box is what the Q1 report was at the one that came out in I believe it was August or September. I can't quite remember. I think it was probably September. And then this most recent Q report, Q2, these are the actual numbers that came out. This is what they made and reported. And then we have the net for first half on the right. Okay. Now, when we look at things here and we look at what the forecast was versus the results, it's important to have the proper perspective of looking at these numbers. All right. Now, yes, by and large, they did not hit their outlook. They did not hit their forecast. However, when you compare what they have done in this quarter to their closest competitor, while Cover Corporation was able to pull in more money in this quarter versus Any Color, their net profit, and I want to say this, distinctly, their net profit was still lower than what Any Color's net profit is. And Any Color is, they have just as many employees as Cover Corporation. They may not have the same number of talent as each other, but they still have roughly the same amount of employees. They still will have, they're still very similar companies when you compare to each other. But yet, Any Color and Cover Corp, when you put them side by side here, you do have see that while revenue comes in higher for Cover, streaming and content is still higher for Cover, concert and events is still high for Cover. Once you take all those out of the equation and you look at what's left, the way that the money and the net profit has been handled, Any Color has been doing a much better job ensuring that there is a consistent amount of revenue that is coming in that is not just already spent. They're not spending money that they don't have and they expect to come in. And we'll talk about that in a little bit. So let's go. Umberto, welcome to the stream. Thank you so much for dropping in, my friend. It's good to see you. I have not been live for too long, or for a while, so I'm glad to see a familiar face. Welcome, welcome, welcome. So right now, Any Color, their stock price is still at roughly, it's 1.59% above opening, with a plus 35 yen. So not the bump that a lot of people were expecting, and honestly a lot of us were not expecting a big bump out of this Q2 report after Q1 came and gone, and they did not meet their forecast, right? But here's the thing too, for Any Color, they really look at when you look at Any Color's numbers versus Cover Corp, there really isn't a real need to change how they're running things, and more importantly, it's probably more process that they have to refine while keeping the same business model. When we look at let's see, what's my next slide here? Go here. Yeah, there's absolutely no need to panic. There's no need for changes or panic. When you look at any colors numbers, Q2 revenue is 9.9 billion yen, and that's like right on the line of what the bottom number for Q2 outlook was supposed to be. When you look at a year-on-year comparison, any color had an increase of 51.5% revenue for Q2 when you compare it to Q2 last year. And that's huge. That's a big turnaround from where they were from Q1. And when you go down and, I've said this before and I said this again, any color is that they're not focused on live streaming like what Lydia and Fallside and all of them are, just drooling over. It's like, they're going down the toilet. Look at they're not getting the numbers that Cover Corporation, blah 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 blah. And it's because they don't need to. When you look at their top two pillars, in commerce and promotion, they overperformed in promotion, and they're almost right there with commerce. And part of the reason why commerce is lower than it probably should be is because they've had extended problems with getting the merchandise sent out and processed and shipped. Then what they're selling stuff so fast that they can't get the stuff made and out in a timely manner, and so they've had this backlog within their own warehouse. But even then, when you look at commerce year on year is up 75%. They only had 1 million yen come in for an event last year versus 242 this year. So I mean, that's an outperformance there. But when you look at promotion, they've increased by 23.7%. Operating profit is when after you've paid all of the staff, and you paid all the wages and the staff, and you've bought all the stuff to make their merchandise and stuff like that. They still have a margin of 40.8%, which is up from last year, which was 37.3%. So there's an increase there. And even with the number itself, that they've increased their operating profit by 65%, and they've increased their net profit by 64.7%. So there's just absolutely no need, and if anybody is out there telling you that any color is in panic mode because of this Q2 report, they are a liar. They are plain out lying to you. And I will argue that point till I am blue in the face and I can't talk anymore. They are out and out lying. Yeah, it's good to see you, Umberto. I'm hoping that I could get things back on track for streaming on a more regular basis. I do still have some family issues that I'm currently handling, but so I've been making a lot of learning through trying to create content that's recorded. But I do want to return more to live streaming here in the near future. So looking at any color stock here, any color stock has risen up to 3%. They are now and it's fluctuating here, but they're between 68 to 71, so they're 3% higher so far. That is still a decent bounce. Hey, how's it going? Welcome. I haven't seen you in a while either. I was just telling Umberto that, I'm still taking care of some family issues, but I do hope that I can return to being more active here on streaming here in the near future. But I just had to do this particular thing live because I wanted to talk about as the stock price and the market was open, just to show and prove that hey, this is not something that is doom and gloom like how some people are constantly trying to frame it here. There's absolutely no need to panic with any color right now. They are, in my opinion, they are in a good place because, as you can see here with the numbers, you look at the numbers themselves. Their net profit is 65% above last year, and bear in mind that is also bouncing back and absorbing the amount that was supposedly short in Q1. You're able to absorb that and still outperform in Q2. There's absolutely no need for them to change their business model or their processes. Well, I take that back. They probably do need to change their processes so there is less wasteful time and spending, especially when it does come to their commerce, because they continuously seem to lag behind in their commerce division because they don't have their warehouse and their merchandise from business to market to consumer. They do not have that particular process down correctly, and some of the later on in some of the financial reports, they actually talk about that, where there has been a backlog of sometimes up to 50% of merchandise that has already been bought has not been shipped yet. So they definitely need to hammer that out in a more efficient manner. So let's see here. Let's go on to the next slide here. Okay, so now there's I threw this in here just as a recap summary, so people who are looking at this and saying, well, you're throwing out profit here, selling there, operating this, ordinary that, what is all this mean? What does it mean? Your net sales or your net revenue is basically is the sum of a company's gross sales minus its returns, allowances, and discounts. So basically, if you're selling something on the market and you have people returning that product to you, that's what they're talking about. Or like if you're giving discounts, and you are knocking 15% off of whatever you're selling, that's what they're talking about. All right. That's just kind of a catch-all for saying this is the amount of money that you have brought in. This is what you would look at here as revenue. It's not net profit; it's the revenue. All right. Now, when you start talking about operating profit is essentially the net income of the company. After you take out the expenses of paying your employees, that you're paying for the material to make your merchandise, all those factors that would be contributed to the product that you are making for the person. And in this case, we're not just talking about merchandise and things that you can touch. We're also talking about the expenses of the livers, the VTubers, their support staff, the people that handle sales and promotion and administration. After you take all of that out, that is what's left is called your operating profit. All right. Now, as we can see here, the operating profit here for this particular quarter was 4,043 billion yen. Now, when you look at the percentage below that, basically that is a margin of 40.8%, which is higher than what it was a year ago. Now, bear in mind, and this is another thing I always try to hammer home, bear in mind that the revenue for this particular quarter, after you take all the stuff out to pay all your employees and everyone else, that the stuff that Lydia and Fallside and everyone else cries about, the company is literally spending 60% of all money that comes in on their staff's salaries, all right, and making the stuff that brings in the revenue for those said employees. You're talking about salaries of the livers. You're talking about the merchandise of the livers, making that. You're talking the support crews that work behind the scenes, that the people that support the livers to be able to do different stuff other than streaming. You're talking about the guy that puts together the plush doll that then goes into a box and gets shipped to you. You're talking about all those people. 60% of all the money that they bring in goes directly to them, to the workers. I mean, that is not that does not scream a company that is starving their talent or not paying them enough, that kind of thing. Or and you're talking we're also talking about a company that again had dropped close to I believe it was somewhere between 2,500 to 4,000 yen over the last it was 250,000 to 400,000 yen over the last 2 years in staff bonuses. I mean, that does not scream a company that is treating their employees badly. It just does, that just does not gel. It does not go together well, in my opinion. And again, that is my opinion. But the fact of the matter is that they do spend 60% of their revenue to support and pay for their talent and everyone that works there. So, okay, I'll get off my soapbox here. Okay, so let's move on here. We're still keeping an eye on Anycolor's stock price, and they have their what the term is called. They're moving sideways. They are back down to about 1.2%. So, and that's kind of what I was kind of anticipating. Honestly, because they're with their earnings being a mixed bag it was definitely not something that screamed we're gonna gap up 25% like we did last time. So all right, so the different statistics we talked about: net sales, that after you take everything else out, what the company brings in minus like returns, allowances, and discounts. Now, when you talk about net profit is basically your revenue minus all the expenses, interest, and tax, and that's how we boil it down to the number that we saw. All right, so why aren't they changing their forecast? Well, there's absolutely no need to, for one. If you look at their disclaimer at the end of every report and every piece of information for investor information, the last page is always this disclaimer that says, they're not obligated to change forecasts. They're not obligated to meet the numbers that are in that forecast. They're not obligated to. It's just a number that they're trying to kind of shoot for, that kind of thing. Now, good companies try to get to that number, and then good companies also try to refine their processes to get to that number if that number is realistic, and they just need to change things like how things flow in the background, but they are not obligated to, right? Also, if you come out and you revise your forecast for the rest of the year, basically you're coming out and saying we are wrong, we're actually going to make less money than we anticipated. That leaves a bad taste in investors' mouths, and it basically destroys any psychological hope that an investor would have that for that second half they might actually get to those numbers. So again, that's why they haven't changed their forecast, but they have shown signs that they can they can produce decent enough numbers in order to get close to those numbers as they are right now. And that's why they'll have to do kind of their own post-mortem afterwards and say, okay, well, what can we do better? Now, what the I actually started terming them the STYWs. They're the Sink the Yacht Warriors. What they don't understand is the meaning of inline. Inline basically means that the numbers that don't quite meet the forecast, however, they fall within expectations or within a certain parameter or guideline. Again, we've talked about how the year-on-year revenue comparison, they're up 51.5% on their revenue. Margins there, the percentages that are below them basically are it's a way for them to express the amount the company is earning per dollar or per yen per sales. So that's more of a tangible number that people can kind of they can process that number when you're, instead of talking about billions of yen and millions of yen, that kind of thing. We already covered about the operating and the net profit, and I just mentioned the next bullet point there with the how the margin numbers are processed and everything. Basically, the operating profit is within line of the forecast, as well as their net profit. Just because they are 68,000 yen short does not mean that it's not a fail. It just is not a fail. So, but again, they're likely not going to see the same to the moon type of bump that CoverCore has currently experienced. How is CoverCore doing, by the way? Hang on, I'm curious now. Yeah, okay, well, CoverCore is down 0.67% or 18 yen per share. So they are they're kind of stagnating out there in the middle of limbo as well. So they're not doing much better than Any Color. Any Color is up to 1.5% higher at 30 plus 35 yen, which is, that's fine. For what it is, it's fine. So okay, let's keep moving along here. All right. So when we look at, I just talked about the disclaimer here from Any Color. They're not obligated to update or revise. They're not obligated to meet numbers, so on and so forth. Those numbers are purely forecasted based upon available information. That's it. All right. Now, when we look at the balance sheet here, and this is something very important I want people to look at and understand. One of the most critical pieces that most other people who talk about any color, they never talk about, yet it's extremely important, is the balance sheet of the cash flow statement, okay? Because the cash flow is basically the money that comes into the company, and then what the company does with that revenue in terms of, making more money out of the money that is coming in. That's what this is, and this is what a lot of people just they skip over, because they're like, oh, okay, well, that just means money coming in, money coming out, blah 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 blah, which is completely not true. All right, when we're looking at the balance sheet here, and you look at current assets, this is basically when you're talking about assets, you're talking about things that if the company had to liquidate everything in the company, that's how much money you would get for it. You have your cash and deposits, which is up 67% from last year, which is amazing, quite frankly. Accounts receivable, that's basically things that people have bought from you, but they have not paid you that money yet. You can still count that as part of your current asset, because they have an obligation to pay you, right? Accounts receivable, there was an increase of let's see here. Oh, that number is wrong, but that number is. I don't even know where I came up with that number. So that number is wrong. That number is pretty much on par with what they had last year. Inventory itself, inventory is also, I think I probably bungled up those numbers there, but inventory should be more towards 9, 6, 8, about 18%. That should be 18. And then, I know what I did. I messed up and was using 23 number, the 2023. But total assets that came in versus what they have, what they have on their balance sheet as far as cash and cash flow, and the amount of money they receive, they have 22 billion in assets that came in. Now, one of the things that is in their liabilities that had grown is their income tax payable. I know what I did. I looked at the Q1. Okay, that makes sense. Okay, so the numbers that are in black and green are the amounts that they have increased from Q1. Yeah, because I got the Q1 open on the other screen here. That's what it is. Okay, so these numbers aren't from year on year. These numbers are from Q1 to Q2, and they had these increases of 79% of current assets, 67% increase of cash and deposits, accounts receivable. It's a 97% increase. That's a lot of that has to do with their merchandise. Inventory. See, this is where they have the biggest hang up. They have 128% of in inventory that they have not been able to ship yet. And that's where a big hang up is of their merchandise, is that they have all this inventory, but they haven't been able to get it out the door. And then you have this other category where things don't fit in. And that's at 92%. With non-current assets, which is basically assets that they're assets that have been sold, but that they have there's a 12-month period in which the contract stipulates that they have to pay for those assets that have been bought. That's up 230%. All right. Now, again, you have income tax payable with 2,167,000,000 yen, and income taxes that it was a huge increase from from Q1, and the primarily is because of the amount that they had received during Q1. If you look at with the current liabilities themselves, they do count debt as a liability in their charts here. And if you look at their debt is extremely small. They have not had to borrow significantly from banks in order to pay for the stuff that they are trying to do. Which is a big plus for a company, because if you don't have those obligations, either long-term or short-term, like you can see in the line below that circled it or boxed in green, if you don't have those liabilities there, then you're not obligated to, or contracted to pay other people that a significant amount of money that comes out of your cash. The only obligations that they have is accounts payable, which is basically that the company has bought certain things and they have either a 3, 6, 9, or 12-month period to pay it off. So, and in this particular case, non-current liabilities would be the ones that take up to a year to pay back, and they don't have any of those. So accounts payable is basically, what they have to pay within 30 to 90 days, which is about on par from last year, and I don't believe is significantly different from Q1. Now, a lot of people will be whining and complaining about the cash flow from the financing activities and the company paying out dividends. Now, as I've talked about before, and I'll talk about it again, is it a waste of money? And the quick answer is no. It's not a waste of money. And the reason why it's not a waste of money is because there is a general lack of understanding of what this chart was that came out at the end of 2024 and the beginning of 2025. There is a specific breakdown here that people misinterpret. Anycolor has minimal debt and loans to pay thanks to their current business model. Approximately 20 billion yen provides the company with enough room to pay their obligations and to buy assets. That is money there that they try to at least bring in and have on hand throughout the year. And this is a net throughout the entire year. This is not just, we have 20 billion just laying around somewhere. What that means is that they are looking at the number down here of cash and cash equivalents to end the period. And they're looking at that and say, okay, do we have enough cash on hand in case something happens and we need to, either have money available or go borrow it. And they aren't a company who is looking at taking out a loan to be able to pay for their business. That in itself is a worrying sign when you don't have enough money coming in to pay your own bills. That's why they keep a certain amount of money on hand, and why it's good to see that they have a good amount of cash on hand in order to pay bills, pay for unexpected things. What happens if a typhoon or an earthquake happens and they need to pay for repairs? All these things. Having that cash on hand is critical in order for them to to meet those demands. Not to mention, if they have a business opportunity that comes in and they need to pay a certain amount of money out in order to do production, in order to get that business agreement signed, having that cash on hand, that's exactly what this what this 20 billion provides them. There is people look at AnyColor right now and they say, okay, well, they've done cash buy or stock buybacks. Okay. Oh, well, and they haven't done it for the rest of the year. I don't think that they are going to do cash buyback or stock buybacks for the rest of the year. Honestly, I think they're going to continue to pay out the dividends. They'll be paying out in increments per quarter, and then you'll have that rate of return come in, as opposed to constantly throwing out, we're doing cash buybacks. The main focus of that cash buyback was to take out some of that liquidity that was out there in stocks that were basically, there was a certain amount of liquidity that was out there because they did their split, and after they did their split, they realized that we just have so much stock out there that it's making it difficult for people to invest in, because who's going to want to invest in a company that's going to stagnate in price, so that's part of the reason why they did the buyback, and why they're now offering dividend payouts as opposed to doing consistent buybacks. And not only that, but the talk always turned around to people saying, if they're doing the buyback, they're just trying to make their numbers look better. And as I've reported in one of my earlier videos, you have to do a consistent buyback program throughout the entirety of a year in order to see any kind of numerical or statistical result in your numbers and your earnings per share and your PE ratio. You have to do consistent buybacks throughout an entire year, and you actually have to, it could take up to 2 years before those ratios and those numerical numbers actually show a difference. And even if they do show a difference, it's usually about I think it was something around 0.20 to 0.40%. So you're not even getting a 1% bump in your numbers at the end. And if that's what you're trying to do, you're going about it the completely wrong way. So another thing that I'd like to point out here with this particular report is that there is a huge chunk that has come out here in Q2 of cash flow from investing activities. Now, investing activities is a very interesting topic, because this is the reinvestment. Hayate, shh, quiet, sweetie. Cash flow from financing activities. Sorry about my cat, by the way. Okay, so cash flow from investing activities. They have spent 1.7 billion yen in investing activities of the company. This is what people were constantly whining, complaining about. Oh, why aren't they reinvesting in their company? Why aren't they doing this? Why aren't they doing that? They have spent in the last 2 quarters, right? The last 2 quarters, they have spent 3 times the amount of money investing back into the company that they did last year. And we're not done with 2025 yet. We still have 2 more quarters to go. And if they keep up this type of rate, we're going to probably see at least 2 to 3 billion yen reinvested in the company. And that is that's for equipment, for production equipment. That's for the studio that they're building, their recording studio. That's for the studio that they're building for 3D performances. That includes all the sound equipment. That includes paying leases and or buying buildings for offices or for other operations. A lot of this also has gone into buying machinery and buying equipment for their warehouse, so they could get that in better order instead of having all of their merchandise stacked up waiting to be shipped. But the point of it is that they're spending 3 times the amount that they spent last year throughout the entire year. So, I mean, there's a good possibility that we could see that number spike all the way up to 3 billion yen invested this year alone in the company. And that's in addition to what they are already paying out to investors through dividends and what they did with cash buybacks, which is what's circled in red but right below it. That number is accounted for already. It's already there. You cannot complain that they are wasting more money, because it's already been allocated into their budget. They've already accounted for it. And what we're seeing right now is the investment into the company to make it a better place for people to work. And that's the most important part. When you're dropping 1.7 billion yen into your company, and reinvestment to be able to bring, better equipment to your employees, that's huge. They could say, oh, we can just stick with the 659 million that we spent last year. But no, 3 times the amount that they've allocated in 6 months alone. That's huge. You can't say that Any Color is not reinvesting into their company. All right, so let's take a look at the stock price. Stock price is still waving around. Stock price is at 2.88% up at 65 yen a share. So, I mean, that's still decent, but they have not been able to break out of that resistance line yet. So we'll just keep on going on here, and we'll go to the next slide here. So we talked about the wasting of money and whether or not it's a warning sign. The biggest warning sign that you would see is if the company starts taking out loans or starts racking up debt in order to cover their cash flow to meet their obligations. And we're just not seeing that yet. The biggest concern I would have, in my opinion, is if we start seeing the cash and cash equivalent at the end of the period start dropping below like 9 or 8 billion yen. Because right now they have enough cash and cash equivalent in order to cover their obligations for several quarters as is, in worst case scenario. But it looks like, at least for now anyways, that they are looking at what they have on hand, and they're trying to manage responsibly how much they want to return back to the investor that buys stock in their company, and then also invest in their company and still have cash on hand for their activities. And bear in mind, the professor that I spoke about in several of the videos I've uploaded, he basically reported that if a company has a business opportunity in front of them, they're not just going to sit there and say, well, we have a business opportunity in front of us, but now we're going to give it back to the investor. If they have a chance to make more money off the money that you've given them, they're going to go make that money, get the profit, and then give you back your cut. They're not going to do it the other way around. So I don't know where that logic comes from. It's very illogical, and they in a financial situation, if there's opportunities out there for them to throw money at and get a return, they're going to do that versus just throw the money back at the investor and say, nah, you keep it, we don't need it. That's not what it's about. If anything, at least the way that they present it as, we appreciate you giving us your money and trusting us with your money, and we're gonna give you that opportunity to either earn it back through dividends, or if you want to buy it back or you want to get it all back, here you go. That's basically what a stock buyback is. So all right, so let's move on here. So we've talked about that. We talked about this. Okay, so price to earnings growth. Now this is something that I wanted to talk about because this is one of the most basic metrics that you can use in order to figure out how a company is doing. All right, hang on. Okay, so price to earnings growth. When you're talking about price to earnings growth, it's an indicator that allows people to figure out the stock's true values. It's similar to what they call the price to earnings ratio. However, the PEG ratio tells you whether or not the stock is undervalued or overpriced. Basically, the PEG ratio is for a given company may differ significantly between one report and another, and that's primarily due to the numbers that come in, the amount of revenue that comes in, how many people currently own stock, so on and so forth. Okay. Now, when you're looking at the PEG ratio here, a number lower than 1.0 is best, suggesting that the company is either relatively undervalued, or that the price of a company and stock-wise is extremely cheap, and that there is opportunity for them to grow. You'll see companies like Nvidia and Microsoft and everything, and their PEG ratio is so high, it's continuously more difficult for those companies to bring back a positive earnings, because those companies just have such a high value. Now, when you're looking at Anycolor's PEG ratio is 0.1801. That's 0.1801, below the 1%, which basically says in the investor's eyes that this company is it's selling as steal price. The PEG ratio and the PE ratio, and also the earnings per share growth rate. These numbers show the potential of what a company can earn based upon the way it's currently bringing in money to the company. And that's why looking at the PEG ratio is very important to a lot of investors, because it gives them a perspective, a basic perspective of where a company is at within the greater market and with investors themselves. Now, there are a lot of companies that are out there like Anycolor that constantly have a low PEG ratio, and people look at it and it's like, well, why hasn't that company ever gotten more expensive? And there may be extenuating circumstances on why that company hasn't, gotten more expensive or brought in more money, that kind of thing. And that's kind of what we look at with Anycolor and Cover Corporation, because you're looking at a company that is a specialized niche within the entertainment / communications / technology industry, and and sectors that there isn't a really big defined thing other than perhaps entertainment, right? And when you look at Any Color versus Cover Corporation, there's an even wider gulf there, because Any Color is pushing more towards the talent agency, V-Liver, idol type of industry model, versus Covercore, where Covercore is actually pushing more towards the technological innovation type thing, with Hollow Earth, with this new Unreal Engine project, with financing several independent games, all these things that they're actually pushing more towards the tech side of things, whereas Any Color, they pretty much said, we're doing extremely well in the Japanese idol culture type of environment, so we're just going to keep going this way instead. So so Any Color stock price has jumped up 5.32%. It is currently at plus 126.29. They're up to 129 plus for their price. So they have finally started spiking up a bit. See, open. So yeah, they're actually jumping up there pretty good. Now it's interesting to see that when you look at the volume here, when you look at the volume of the amount of shares that are going in and out of the company, there is a ton more buying here, which has finally allowed them to break that that resistance zone. And it could be just be that all these sells here are shorts that are dumping their stock, so they don't have to pay an absorbent amount of price, and lose money, because if you're holding stock and you're selling short, you basically start running into the problem of you're getting to a point where you're starting to owe more money because you keep buying, trying to stay ahead of it. Let's take a look at the Bollinger Bands. Oh yeah, they're trending higher on the high end of it, and they are at, oh wow, it's trending at 1.07. That's typically what does the volume oscillator say? Oh wow. So the volume oscillator down here, basically, as long as this line here is in an upward trend, an upward slope, that shows that there is minimal resistance pushing the price down. Now, as we just saw here, the next 5-minute mark started, and there's selling going on here, which has pointed the volume oscillator down. So that's basically showing resistance towards the upward trend. Now the upward trend, here could also be a result of people that are there's just more people selling because it's running out of steam. What does Sorry, I have a different terminal that I'm keeping an eye on things. There has been a constant amount of selling over the last 5-10. Over the last 10 minutes, there's been well over 250,000 shares that have been bought. And it's still not completely in a reversal yet. Interesting. Okay, so let's get back here. We'll keep keeping an eye on this. So far we're still hovering around 5.75 in the plus, and it's still trying to push its way upwards. So we'll keep an eye on this. That's making me happy because they're making me money. I mean, I find it kind of ironic, right? Okay, so here I am, and this is not me trying to brag or anything like that, right? But here I am. I am a independent VTuber with an extremely small, according to other people, an extremely small YouTube channel. Yet I have I have stock in both VTuber companies, right? So I have investments in both VTuber companies, and I'm getting paid by these VTuber companies, but it's not because I'm working for them. It's because I own stock in them. And if let's just say, for the sake of argument, right, that I were one of these other big VTubers, or medium-sized VTubers who are monetized, right? I mean, I would take my that money that they are making, and I would be investing in those VTuber companies that instead of trashing them, because I mean, you'd be making money off of them every quarter. You'd be making money off them. I mean, off of Any Color, I have made close to 88% return on investment on Any Color, and that's because I earned 22%. I earned 22% off of their year-end report, right? And then I took my investment, let it go down, reinvested into it, got another pop up of 15%, right? And then with Cover Corporation, I mean, I've made over 50% return on investment with them because their stock jumped so high. I would be investing in these companies, buying my stock, and allowing them to help fund my channel, because I'm making money off of them as an investor. I mean, it's literally it's a no-brainer to me. But I mean, who am I? I'm just a small VTuber. Okay, so let's go back to what we were looking at here, and see. Did I have anything after this? Yeah. All right. So the STYs, we'll play this up like usual. They're gonna look at the Q2 report, right? They're gonna look at it and say, "Oh, look!" They're gonna immediately go to the Nijisanji EN section, and they're gonna say, "Oh, look! They've only made half of what they made in 2024. I mean, look, this company's in trouble. Everything is going wrong. There's no chance for them. They're donezo." And honestly, I mean, at this point, it is almost a laughable type of comment that comes from them, because if you look at their numbers, right? If you look at the Nijisanji numbers as a whole, as a company, you begin to realize that it's not about the streaming. It really isn't, and that's what these other people are always making it about. They're talking about how little they're pulling in on streaming, that they're losing this, they're losing subscriptions, they're losing fans, all these things are disappearing on them, right? When in actuality, it's already been explained to the people that actually are smart and pay attention, and they're not like minimal information, just nod my head in the right direction type of people, that most of the outflow of these supposed fans were already accounted for within the greater whole of the fandom, because they were Japanese viewers and they were tired of the English BS that these people constantly throw around. They don't want to deal with it. If you listen, all right, let me tell you something, okay? If you actually pay attention and listen and read what the Japanese fans look at when stupid Americans and stupid English speaking people are talking crap on their channels or in the chat or so on and so forth, they publicly trash you and they make fun of you because you are such an idiot for coming along and spreading all this crap. They don't want nothing to do with it. They want to be able to enjoy the person that they're watching, not type in their name in the search box and see all this garbage that you're supposedly making up on them that's supposedly true, which probably half of it isn't, right? I play Mahjong with a Japanese VTuber every Thursday, right? And she's not a big channel, she sometimes there'll be up to 20-25 people in her chat, so sometimes there's just 9 or 10, it is what it is, right? But I play Mahjong with them, and I played Mahjong with her for over 6 months now, every day on Thursdays in the morning. And I try to be courteous and talk to, because she doesn't speak English very well. And a lot of the people in chat end up telling her what I was trying to say, right? But I made the effort to try to speak with her and try to learn the language, so on and so forth. And it got to the point, right, where I was talking to them, and several of them were like, "Is this guy really? Does he really live in the U.S.? He's so polite. He's so nice. He's so nice and courteous. He excuses himself when he makes a mistake. He doesn't try to get in the way. He wants the other fans to enjoy spending time playing with her instead of me trying to butt in because I'm a VTuber myself. They're like, is this for real? Are you really a person that lives in America? And I'm like, yeah, I am. And they're so impressed with the fact that somebody, an English speaking VTuber person, fan, whatever you want to call it, is being so nice and polite within the chat that they actually enjoy me playing with them and me talking in chat, because you know, I'm not a moron. I'm not a moron like these other people are, you know, like you know, Falsight and the Sink the Yacht crew and everything else. You know, I'm not going around, you know, patting myself on the back every time that a company I don't like is losing. You know, or their perception of them is that they're, you know, they're losing money or whatever like that. You know, I mean, it's almost pathetic that people take, you know, and this is my soapbox opinion on this, but it's almost pathetic that people take what they perceive as you know, detrimental news or bad news for a company and actually, you know, wear it as a badge of honor. It's pathetic. It's sad. And the fact that there are people out there that will give them money to continue to do that is even more pathetic. Anyways, that's my soapbox. So, anyways, Nijisanji En, they're gonna look at these numbers and say, they're losing the blah 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 blah, right? But if you look at the, you know, their income or their revenue, you know, commerce is still up. That means, you know, people are buying their stuff. There's an increase from Q1 to Q2, so you know, there is definitely you know, gains to be had there, as well as promotional gains. Now, you know, I'll point out again that their live streaming is not the pillar of their revenue, which is not, for one, it's a good thing, and two, Any Color is basically showing that a reliance on streaming as being your primary source of revenue is something that you don't need to have in order to be and still be a VTuber company, which is awesome to see, because you know, you basically limit yourself by only being a product that's on a streaming service, as opposed to putting your picture and your name out there in everyday commerce and having them promote stuff. So, okay. Any Colors up to 7% gains. All right. So income statement. If we look at their income statement from last year to this year, there is, as noted before, 44.6% of all revenue goes to pay the VTuber salary, pay the platform fees, and also for the sales and shipping of their merchandise. And that has been consistent from Q1 to Q2. And if you look at the broader spectrum from last year, it's roughly the same. It's called, you know, it's variable cost for a reason, and that's because it can vary. But the consistency across the board is typically around 43 to 48%, and then you have a couple of higher numbers there as well. And then cost of sales, basically that's that number here is the people that work in the warehouse or the manufacturing of their goods or services, or provide tech support, or you know, they provide audio support for the livers. They have their own column there. And then your SG&A, the SG&A, the sales, the goods are actually bundled in there, as far as like if they're contracting out to other manufacturers to make the goods, that kind of thing. And then that also includes the artists, if they hire a freelance artist to make that stuff, that's also included in this. Now, if we look at the revenue here, it's been largely consistent. And in fact, like I wrote down here, if you look at Q1 and Q2 of this year, and then you look at last year's, basically the numbers are flipped. Instead of, the 1.879 billion in Q1, that number is in Q2 of last year. And then if you look at Q2 for this year, that number is basically the same as Q1 of last year. So, and that goes along with almost every other metric of last year, which is a positive sign, because that means that they aren't behind the curve on what they're trying to do. They just need to extend what they're doing or refine their processes, which is a good thing. Let's see here. Let's move along. Okay, so the IFIS, they are one of the larger type of finance information services that covers stocks in Japan and the Nikkei, and they also provide other information for other stock markets for Japanese consumers, for like the Dow and the Nasdaq and so on and so forth, right? And if you look at their report here, they basically said in their report that despite the fact that they did not hit their forecasted numbers, the box that is highlighted in red here still calls this a strong buy, a stock to buy, because they believe that the stock had bottomed out at the time of their Q2 report and would go higher. As we've seen so far today, their stock is now up 6.48%, which seems to indicate that their call on this is relatively correct on their forecast. Now, they have 3 different analysts that work for the IFIS that have all looked at the financials for any color, and all 3 of them call this a buy. So they've reinforced that commitment to it. However, in my opinion, I don't have the lofty expectations that they have, as well as one of the other finance information companies have also put out there, where they're still calling for somehow within the next 6 months that the stock will hit 400 or 4,000 yen a share, which I think is just a pipe dream, honestly. I don't think that they're gonna get anywhere close to 4,000. I would be super happy if they did, because I would basically double my investment in any color. But I digress. I mean, right now they're at 24.75 as of today's stock trading, and quite frankly, if they get close to like 3,200 yen a share, I think that's going to be their top for this year, honestly, unless they somehow have an amazing Q3, which is possible, but who knows, right? If they have an amazing Q3, I could see it getting higher than that. But for right now, the way that, this is my opinion, I think that that their stock is probably going to get to about 28 and then just kind of hang there for a while. So, but this also kind of reiterates what Any Color has come out and said, is that they are not making any changes to their forecast. They they believe in the business model that they have currently developed. That they're seeing the numbers that they want to see, even if they don't reach the forecast. They're seeing the correct ratios that are coming in from each pillar of revenue that is coming in, and they believe that they can improve upon that in order to get those numbers better. So the IFIS continues to be bullish on the forecast that Any Color has put out, which again, I would be super happy to see 4,000 yen a share. Whether or not it gets there, who knows? Okay, so last slide here. Okay, so and this is the business model that we have been that I've been talking about for Any Color. Any Colors, they have this business model of 4 pillars that includes 16% revenue from live streaming, 59% from commerce, 18% from promotion, and only 6% for event. Now, I'm going to talk. I'll explain event a little bit, but I want to tackle the first 3 first. For live streaming, there was it's basically a miss on live streaming because they fell below the 16% within the revenue that they brought in. That could be due to a number of things, including the fact that that they did have some other people that had graduated along the way or went on hiatus, that kind of thing. So that number is lower than what it should be or what they expect it to be. So whether or not they can bring that number up is part of the question. However, if another pillar outperforms, then that could make up for the shortfall in the streaming. Just like with the commerce here coming in at 67.1%, and the benchmark is 59%, so they outperformed, which basically covers the miss that the live streaming how their revenue came in for the live streaming. It's basically the commerce can basically cover for that miss there. Now with event they expect 6%. They only had 2.4. There have been a number of changes with events that had happened or were supposed to happen. I know that there is a couple that are going to be happening supposedly this month and then going into Q3. I personally don't follow what events are happening with Any Color, so that kind of is what it is. However, their promotion itself, lending out their IP, putting their various VTubers out or VLivers out there in order to help promote other companies, formulating those business contracts with one another, that kind of thing. That number has been largely in line with 17.9%. So if we are looking at any one pillar that that they will probably work more on, it would probably be more consistency with their live streaming, and then also refinement with their events. Now, the reason why events for Any Color is so small compared to what Cover Corporation does, it basically boils down to this. So Yago at Hololive, he wants these spectacles to happen. He thinks spectacles are the way to go. You have to come in with a big bang. You have to go out with a big bang, and then everyone will follow you, right? That's basically his mentality and the way that he has brought these things in. Now, if you're going to be putting on spectacles of grandeur like that, it's going to cost money in order to produce and then promote it. And see, that's where the business model for Hall Live and Nijisanji differ, because any color looks at it and says, we are, we're going to be putting on performances and shows and stuff like that, but we're not going to make it a huge spectacle. We're going to do small to medium type of shows that where you could have a certain amount of audience in attendance, or have them show up at a convention or everything like that. But they understand that if you don't have the logistics in order to put together an event of that scale, and you don't have the logistics within your employee your employee pool, you're going to have other people come in and do this stuff for you. That means you're going to have to pay more money out there just to get the show together in order to put everything together and put it out in front of other people. Is it going to be worth it? That's basically what, is it worth the cost of putting on this entire spectacle, only to pull in 6% of total revenue? That's basically what they're asking themselves. And the last Nijisanji festival that they did put on, it was in the comment section after the event, and that following earnings report, they acknowledged there was a tremendous amount of overhead costs that they did not account for, which is why their revenue fell short for that particular quarter, because there was so much that you have to pay for it. They didn't have the logistics or means to do it themselves, so they had to hire people to come in and do it. So that's one of the main reasons why event is so small. And despite what the STYW people think, they didn't scare them out of America, and go back to Japan where you belong, being racist like that, I mean, that's basically what it boils down to is, they're like, well, you're a Japanese company, you're a black company, get out of our conventions. That's basically what they're starting to boil it down to. And that's basically where their audience has been focused on. The reason why they're focusing on their Japanese audience is because just like the Japanese viewer, they're tired of your BS. They're not going to spend money. They're not going to spend money on a branch that is getting shade thrown at it left and right. And every single wrong thing that ever happens is getting magnified by a select few of people that are just trying to make noise because they don't like a company. Why would you invest? I would not invest $50 million into a product and then drop it in Skid Row in California. Why would I do that? Why would I bother? Does that even make sense? And the comments that keep coming along of they don't pay enough, they don't, they're just taking all the revenue for themselves, and it's categorically not true. Again, like I've shown here tonight, they spend 44% of all their revenue paying and promoting and producing their livers. 44% goes to them. And if they say, well, 40% isn't enough, well, 44% goes to them, and then an additional 23% goes to all the people that help those people, including the livers, do what they're doing. They're not walking away with they're literally walking away with maybe 20% net profit, maybe 20% net profit, and even that profit has to be utilized for the company itself. It's not like that amount of money is going into a single person's wallet and they're walking away with it. These people, they they literally make smoke where there is no fire, so they can say there's a fire there, even though they're the ones that started it. I mean, that's basically what it boils down to. So, so real quickly, let's see. Let's look back at where the stock is currently at. Window capture, boom. So as we can see, we are sitting at roughly 6% increase of the stock. If you look at the volume oscillator here at the bottom chart here, you see there it is starting to slope downwards. That's starting to show a lack of momentum, continuing to push it up. So there's more pressure pushing the stock downward. There has been quite a good amount of sell or buys here in the volume here, which is always a good thing. Now, if if these bars start trending lower and they cross this red line there, that basically confirms that the stock is heading downward. Right now, it looks like it's just kind of trending along the line here, and I believe it's actually. I think they have about 30 to 40 minutes before the market breaks for lunch. I can't remember if it starts at 11:30 or 12:30. It's one of the two. But their morning session is getting close to ending here, so it'll be interesting to see whether or not if it continues to trend higher after lunch, or if it keeps going sideways, or if it goes downward. We'll keep an eye on that. Okay, so let's look back at the form here that was released. So as you can see with the financial results form here, a lot of this is basically in raw form that gets kind of beautified, and presented in a nicer fashion when it comes to the investor materials that is put out there. But they do give some interesting context here, where this is the results for 6 months. So they're basically taking Q1 and Q2, and they're presenting it in a 6-month result pattern here. Okay, now when we look at net sales here, and this is basically gross profit. That's not net. It's not net profit. It's gross profit here. That's just their terminology for it. As we can see here, it did increase from last year in total amount of net sales. Operating profit here was relatively the same. There is about a 300 million yen difference here between the top and bottom, but it's mostly the same, which isn't completely a bad thing. But you would hope that after, again, operating profit is when after you pay all your employees, after you pay all your bills, your obligations, you pay the for water, gas, electricity, internet, everything else, that's what you have left over there. Let's see, actually, yeah. So let's go onward here. But when you look at net profit sales, I mean, the number, it comes out roughly the same. Oh yeah, sorry, I misspoke. So operating, I thought I did. So operating profit here. This is after you pay all your employees. This is when you pay all your employees. You pay all of the platform fees for for them streaming on YouTube or another platform, anything like that. That's what that covers here. This number, ordinary profit here, is relatively the same thing. There is like a I think like a tax that is also included in the number, so that's why it's slightly different from operating profit. But your net profit here is basically after you pay everything. You pay all your employees, you pay all your obligations, you pay for everything, and this is what's left over. And when you look at 2023 to 2024, it's relatively the same. And that, again, that is not a bad thing, because that continues to say that the company is continues to be profitable under its current structure. It's you don't want to see stagnation with profit and income coming to into a company. You're always looking to continue to grow that investment into the company, having the company make more money, putting forth new initiatives, those types of things. However, people also need to understand that with fiscal year 2025, there has been a major switch in the way that they're doing things. All right, they have basically backloaded Q2 and Q4 as their big money months, where Q1, like we saw here 3 months ago, was a lighter quarter, and then Q3 is supposed to be about as heavy. And when I say heavy, it's relative terms, but it's going to be about as heavy as what Q2 is. All right, so they're expecting Q3 to look similar to what Q2 is, and then of course when Q4 comes at the end of their fiscal year, they're looking for that big finish for the year. Now, when we looked at the sheets here for the income statements here, like I was pointing out here earlier, when you look at 2024 here, you had big revenue come in for Q1, and then it got smaller for Q2, right? And then it was bigger again for Q3, and then Q4 was bigger than Q3. All right. So basically, what AnyColor had tried to do, and they've mostly succeeded in doing this, is swapping how they did Q1 and Q2. So Q1 would be the lightest of the quarters, and then each quarter would build upon each other. They did not want this, high here, low here, climbing higher here, and then climbing higher here, and then going back low here. They didn't want that kind of consistent. There was an inconsistent amount of activity. They wanted more consistency within their income and within the way that they were operating. So that's the main reason why Q1 looked so horrible, is because they essentially made it its lighter month, so they backloaded all of the other quarters to build upon each other. Which, I mean, honestly, that's not a terrible thing, because when you looked at Q1 here for 2024 to begin with, there was a lot of residual sales that spilled over from the prior year into this physical year, and they didn't want that for 2025, like what happened in 2024. They still had some residuals that came in for Q1 on this fiscal year, but they did not have the same type of spillover that they had the year before. So when we a lot of these other metrics here, these raw metrics here, this is what's used by the financial analyst in order to, they formulate, have different formulas and different ratios. When you look at Japanese websites as opposed to the American websites, there is a heavy emphasis on metrics and basically what they call studies in order to build ratios off of these various numbers. So April 2025. Okay, so basically what they're looking at here is for the full year. They have not changed anything from the full year. They're probably not going to hit the 39 billion excuse me, the 39 billion yen number for net sales. They're probably not going to hit it. It'll probably fall somewhere around 37, I believe, based on what other sites are currently calling for. I had that at the beginning here. Where were you? I don't remember where I put that graph. Anyways, they're probably not going to hit that, but I mean, honestly, the largest thing that they are looking at this point is being able to hit the 4 pillars here and get within these ratios here. If they can get within those ratios and still not turn a loss for the quarter, I think that's probably what they're looking for more than anything else at this point. If they really wanted to make their stock price go higher, there's a lot of different ways that they could do it without just like False Side claimed, it's giving out free money, buy now. No, it's not buy now. You're not getting any free money off of this. But there are different ways that they can signal that that they are looking to up their stock price. So one of the bigger things that they can do to signal that they have increased confidence in the company is use the cash flow, like what we talked about here on their statement here, and they would be spending a lot more in investing activities here to signal that they are they're reinvesting a lot of money into the company. It's a continuous thing. Large sums of money of reinvestment typically equate to near-term profits because of the fact that you are putting money into either making a profit or in order to secure more space or assets or even employees, because you're expanding your company. You would see more of that in investing activities as opposed to like financing activities, which is basically a one-shot deal of this, like the stock buyback. So I honestly think that they would probably do that more than anything else if they wanted to signal, hey, spend more money into our company, buy more of our stock. This is what we're doing, that kind of thing. As you also look here on this report here, you do get a glimpse of how the stock activity is working. and it from April to October, the amount of stock that was out there, including treasury stock, decreased by almost 3 million. And and part of the reason of that drop is because of the cancellation of the treasury stock. Right now, they say there. It says that there's only there's a single share of treasury stock in there. A lot of these singular shares are. I don't know quite how to explain it because it's so. It's so it's so weird how they do their stock trading over in Japan. You have to buy units, and units include 100 shares per unit. Most of the time, when you get these singular shares, it's either because they had the share before the company went public, or because they had reinvested the money that they would receive through dividends back into the company, which would then buy a singular share, like what we see here. But it's just weird how you see one share hanging out there. But anyways, so let's see here. Treasury stock as of April, that has already been canceled. If you look at the 6-month period from 2023 to 24, and this is also kind of an interesting statistic here. If you compare the amount of stock that is owned from 23 to 24, it's almost the same. There has been just as much buying back into the company as what they have done to cancel out existing shares that were out there that were bought back. It's almost at the same level as it was last year. Now, the obvious difference here is that the stock last year as opposed to this year was significantly higher in value. Part of that, as I've tried to explain before, part of the reason why the stock was so inflated last year as opposed to this year was because of the amount of buying that had initially happened when they went public and they hit their banner year. They hit that sweet spot where their stock went up to, I think it was like 5 or 8,000 yen, something like that. And then they ended up doing this stock split way later after the stock had started dropping back down. And then you ended up having people with stock that was still at a inflated price, and they continued to sell off into this year. And now the stock is more or less, in my opinion, it's more or less in line with where it should be because of the stock split. And what we've seen from 2023 to 2024 is the gradual deflation of the stock price down to where they had expected it to be after the stock split, because it was actually quite amazing that the stock had stayed as high as it was even after the stock split, because you basically went from people owning the 32 million shares, and suddenly there were 64 million shares out there, and that price still remained, and people just hadn't been selling off as quickly as what they had expected. So it was actually quite interesting to see that. And I think that's probably the other reason why they went with the stock buyback as well, because you take away that access liquidity out there. You're trying to maintain a certain balance and healthy price of your company, and instead of this inflated price, because basically the inflated price did not reflect what the company was currently giving out as far as product. It was a lot more hype than it was value. So honestly, I think that with the price as it is right now, and right now it's sitting at $24.84, between 2400 and I'd say probably like 32 to 36. This is my opinion, and this is based only on intuition. This is not advice or anything else like that. I think that would probably be the healthy spectrum for the company. Now, if we look back at the window here, and we see that it's still at roughly 7% here. Let's go in here for 1 second, because I want to show you guys something right here, and I'm not going to be exposing anything, but I do want to. So this is essentially the financial health of the company as interpreted by investing.com. All right. Now, cash flow. We've talked about cash flow a lot already, and and this is where I've been able to glean a lot of good information about the cash flow here. Relative value is where the company is currently sagging behind, and a lot of the metrics here, and I'm really don't want to try to explain these metrics, because to me, I've had to read them, how they work a lot, and I'm like, oh yeah, that makes sense, and then I completely forget about it. So, but a lot of these metrics here tend to show that the relative value of the company remains a sticking point for a lot of investors and a lot of analysts as well. And part of the reason why is because it is more or less a virtual idol company. Your product is going to be the music, the distribution of media and merchandise. And that's where in a lot of ways, Anycolor has been really trying to improve upon that through merchandise sales and promotion, because the relative value of the company lies within the IP itself. And right now, the focus of their IP is in Japan, which hopefully, as we continue on throughout 2024 and 2025, we'll see this relative value increase because of the returns that they're putting in for promoting their company. Growth health has taken a hit here, especially after the company went public, and then after starting off with a bang. They have not been able to continue the type of growth that you would like to see within a company. And again, because they are an entertainment company and they're putting out product that is distributed and music, videos, merchandise, that kind of thing, it's hard to be able to quantify that within metrics, because part of it is like how they describe it in their earnings report. It's variable. It varies from month to month, quarter to quarter, and I think that's a huge reason why Anycolor is trying to solidify themselves as more of the VTuber idol company, whereas Cover Corporation is looking into trying to get the next generation technology to integrated with with 3D modeling and virtual idols and making big games and so on and so forth. that's really what we're, they have had a lot of investing put into. But again, we're almost into 2025, and we still don't have a full working version of Hollow Earth yet. So, people are like, okay, well, you keep putting out these little teasers and stuff, but you're basically just selling us digital goods by putting out a teaser saying that a game that does not really do anything has digital goods for us to buy. It's like, okay, but when's the game going to come out? That kind of thing. So, and also price momentum has also been a sticking point for this company as well, and with Cover Corporation too. Because price momentum heavily relies upon what you're telling the media, what you're telling investors, what you're putting out in press releases, things of that nature. And while they do a good job of putting out a certain amount of press release and advertising for upcoming shows and merch release and that kind of thing, it's not really the type of advertising that that grows an audience beyond what the audience already is, and maybe other people within the same niche of enjoying virtual idols. It has to be able to grow beyond that in order to gain new customers and new interest in there within like the anime and the Akiba type of crowd. I guess even the otaku crowd. I mean, you have to be able to get the message out there that they exist, and not that they only exist as a novelty, but they also are around to stay, that kind of thing. If you're able to do that, then you're able to have positive health growth, and then also positive momentum and price, because you're not just telling people, hey, we have new merch on sale for this person. You're attracting other people of interest that that maybe would also buy into the product. And that's kind of where that sticking point is right now, because they're not quite anime, but they're not quite a completely tangible virtual reality type of person that is managing themselves virtually, and you can only see them on YouTube. But there is so much content on YouTube that is also entertainment. So how are you going to get them to watch them first before anything else on YouTube? That's the other thing. So at any rate, let's go back here. All right, so let's go back here, and we'll take one more look at So what we're looking at here is essentially what investing.com calls their scorecard, and they have their own way of figuring out what they consider a fair value is for a particular stock. And then they also give their interpretation of how much of an upside that stock has before it becomes overvalued. And for quite a while here, this was always tagged as undervalued. So seeing it jump up to this price here is very, very nice. And this number is a little bit lower than what I would personally expect to see as a fair value, but hey, it's their own metrics, so whatever, right? Now they have different ways of figuring out technical analysis of whether it's a buy or a sell. I really don't want to get into that because there is a lot of different ways people interpret the technical the numerical numbers, and formulas and everything like that. Now, when we look at analyst sentiment, this also relies on people that track the company and then make their own projections. As we can see here, they have tracked all the way back to 2023 and them falling, and then they're looking forward. That they're still projecting 4450 within a 12-month forecast. I don't agree with it, but I'm a scrub. I don't get paid to do this on a regular basis, so whatever, but they again they have their ways of figuring this stuff out, and as an American firm producing this type of forecast, even the people on Japanese forums say that we're crazy. But there's several financial analyst sites as well that are saying the same thing. So I mean, I guess whatever works for you, right? So let's see here. I think I hit most of what I wanted to talk about today. Let's see. Yeah, 6.48% is where we're at on the stock. So that the good thing about this is that if there was a sudden increase in their stock price, it will likely happen as soon as trading resumes after lunch. All right. Now, me personally, and this is just speaking personally, I'm kind of happy with the fact that it's climbing at an incremental rate like it's climbing right now. I'm really kind of relieved to see it climbing like this, and the reason why is because in Q1, I had a 28% increase in stock price jump, and they had immediately put the brakes on trading for the company because the percentile had exceeded the stock market regulations, so they had they were required to put the brakes on, and I was so mad because I had a feeling that it was going to go a lot higher than that, and it kind of did afterwards as well. The following day. So but the momentum was so hard, coming out of that Q report into the next trading session. I was just like, come on, just let it go. I want to see this thing climb. I would have been happy to see it climb all the way up to 50%, but I mean that's just the way that their market works. And it's been floating around here close to 7% now for the last 5-10 minutes, which is a good place for a stock report, for a Q2 report that reports the companies largely in line with their stock market predictions, or not their market predictions, but their financial results. For them to be largely in line with those results basically means that, hey, we are making we're making a profit within the company is making money, we're making money, you're making money as an investor, everyone's making money. There is everything's situation normal. We're going to keep doing what we're doing. We'll work on things to make it better. We'll work, keep doing the things that are working. We'll make the things that aren't working better, and then we'll see again in 3 months. That's basically what it breaks down to, And honestly, I would rather a company come out and basically say that than have the company come out and say, look, our Q2 report fell below expectations. We're gonna revise this down so we can exceed expectations, in Q3, because that basically admits like defeat, and they're admitting the defeat, and they're lowering the bar so they could surpass it in Q3. Which it's basically like, okay, I can't jump over this bar that is 6 inches off the ground, so lower it to 3 so I can jump over it. That's basically what it comes down to. For them not to lower the bar on themselves basically also says, we can do better. We're going to try to do better. We're going to continue to try to do better so we can, meet your expectations in Q3. I would rather have a company say that than say, no, we're just going to lower the bar so we can surpass it. And, everyone can say that we overperformed, even though they really didn't, because they lowered the bar, the quarter before. You just don't want to see that. You really don't. And honestly, if you watch some of these other people, if you listen to some of these other people, right, and you're free to believe whatever you want to believe, but if you're listening to some of these other people, and you automatically start hearing them talk about how badly Any Color did. Listen to what they're trying to sell you, and then put it in the context. And this is the best context that you can possibly put it into. When you compare Cover Corporation to Any Color, if you, let me get it on screen here. There we go. Compare it honestly. Seriously, if you hear these people, talking, about how badly the company did, put it in context with how Any Color did, and let me. I want to move my head. Let's move my okay, move over here. Okay. So, and we're gonna close the chat window here for a second. So I mean, just put it into context with, against what CoverCore did in the same quarter. Because if you put it in context against the other company, the competition, you immediately see that there is a huge difference here. Cover Corporation brought in 10 billion yen. Okay, they brought in 10,688 million yen. All right, compare that to Any Color. Any Color didn't even bring in 10 billion yen. That's what they're going to try to sell you. They're going to try to sell you and say, look, Any Color, is outperforming, Any Color, Cover Corporation is outperforming Any Color. Look, like they can only bring in 1,222,000,000 yen off their live streaming, and Cover Corporation is bringing in almost twice that amount. Good for them. But then put the numbers into context here, right? What are the two pillars of Cover Corporation? It's streaming and content and merchandising. You compare merchandising alone to the commerce and merchandising for Any Color. I mean, Any Color is outperforming them in that. Put the numbers in perspective with licensing and collaboration, otherwise known as promotion. Any Color is outperforming them there. They may be putting on these concerts here, and they may be bringing in more out of these concerts, but there is nothing within these numbers here that show or reflect how expensive those concerts cost to put on. And that's the big missing component of what we're looking at here, is you don't see the cost of what it took for Cover Corporation to put on these events or be part of these events. And that's where you start really looking at, okay, well, how much is operating profit here? Again, operating profit means you pay all of your employees, your staffing, the people that are helping with concerts, helping with your software developing for your game, the network manager, all those people, right? You start looking at that. Okay, well, operating profit. How in the blue hell did Cover Corporation go from bringing in 10,688,000,000 yen, but when you get down to operating profit, after paying everybody else, again, you're paying everybody else, all your employees, you're paying them, you're putting on the core part of your company, which is for Cover Corporation is streaming content, doing concerts, and merchandising, right? Because of all this talent that you have. There's only 25% of your revenue left, after putting on these spectacles. How is it that Any Color is still reflecting a 40% operating profit compared to a company that is supposedly outperforming them? The answer is because Yago and Cover Corporation spend more money putting on these spectacles. They're paying this money out. They're paying with revenue they hadn't even brought in for that quarter yet, because they're betting that if we spend all this money here, that's going to translate into bigger profit margins later on. But I mean, you even get down to the net profit after paying all your bills. You pay all the expenses. You pay your taxes. You pay, for the guy that drives the van that takes out the merchandise. You pay the forklift man. You buy him a new forklift. After you take all of that out of the revenue, you end up with 1,500 million yen? And Any Color is almost banking twice that amount. What does that say about these two companies? One of them spends big and is burning through their revenue left and right just to try to be the spectacle and be the best out there, and so on and so forth. They are spending that much money trying to be the spectacle, whereas Any Color is tactfully and probably thoughtfully, spending their money within reasonable limits in order to expand their company gradually, instead of making all this investment and hoping that there's return from all the stuff that they're investing. That is the key. When you look at Cover compared to Any Color, one of them brings in a ton of money, but burns through that same amount of money within the same quarter and barely pockets 15% of that money. Whereas the net profit from Any Color, you're bringing in the same amount, but yet they're also they're also banking 28% of what they're bringing in, so they can utilize that later into other projects. Whereas, Cover is like, okay, we're bringing in all this money, we're gonna put on this spectacle here, And if you look at the numbers of how much Cover Corporation actually spends putting on these these spectacles and these huge performances and stuff like that, they spend a lot. And that's one reason why they have really tried to escalate the completion of whatever studio that they're building, because if they are at least able to do that, then you cut part of the cost out right there. But if you look at like what Any Color is doing, Any Color is looking at making a 3 times the size of where is it? Oh yeah, that's a good slide to look at here. If you look at this slide here, benefits of opening up new studio and its impact on the future. Right, this is the studio that Any Color is building, that they're putting together, right? And it's going to be 3 times the size of what they're currently using. They've already put in, I believe, I don't remember the exact number in yen, but it's somewhere like between $2 to $4 million. If you look at the trade-in, I don't remember the exact amount. But this studio that they're building here, it is going to be three times the size. Content developing on there, that the new studio will offer a variety of functions for 2D and 3D studios, recording studios, and individual distribution booths that can be used for a variety of purposes, which is awesome in my opinion. I mean that sounds great. If they're able to complete this and bring it into fruition here within the next year, that's really gonna be awesome. The impact of expanding distribution studio for the future, higher quality content, better sound, so on and so forth. Better equipment. They're looking at creating new different types of content once that's completed, which is similar to what Cover Corporation is doing as well. The big thing with this, at least in my opinion, is that partly explains why they have been spending 3 times the amount of their cash flow into investing. A large part of that is going into this studio that they're building. One of the other things I forgot to mention with cash flow here is in a lot of cases here, what they also package in with investing activities here is that they are also purchasing assets, either digital assets, or they're purchasing rights for utilizing assets like utilizing Unreal or utilizing the Unity engine. A lot of that ends up being included with the investing activities. Also, part of what's in the investing activities includes that they, whatever partner that they're collaborating with for, say, like, for presentation, to advertise a specific product, a lot of that money also goes into the investing activity column, or it will also fall into what we look at on the left with other. It'll fall in under there as a liability, and that is a major thing that gets accounted for is that they do have to kind of meet halfway with a specific company and have a certain amount of leverage within the company for them to shake hands and actually promote a product. So there's a lot of the cash flow here. Again, like I've said, the balance sheet and the cash flow statement is a huge source of information and a huge way for you to understand how and what the company is doing and what position they're in, because you can identify what they're putting their money into, what they have already obtained that they're holding on to, and whether or not they are signaling trouble ahead by borrowing money, developing a certain amount of debt, bringing loans in that to say that they have cash on hand, all those types of things. So but this itself, I'm happy to see that they have been making a good amount of progress on this studio. So hopefully it will be finished by the end of the fiscal year. But I would not be surprised to see this number here, the investing activity number, inflate to 2.73, maybe even 4 billion once everything is said for. It's simply because a lot of the stuff that they're ending up having to buy is stuff that is probably already back ordered, from the manufacturer itself. A lot of places just they haven't been able to keep up with demand. So we'll see on that. Let's see here. Let's also look at we'll go through here real quick. A lot of this stuff we have already talked about. We talked about the financial results here. Now here's one of the caveats that we had been talking about here, along with the commerce and why it had underperformed for this quarter here. First off, they had merchandise that fell behind the schedule shipping from Q1 that they had not gotten out. But as they got that out, there was also a backlog for the Q2 merchandise that they haven't been able to get out. So they're looking at trying to finish getting their Q2 merchandise out so they can hopefully get Q3 out on time. We'll see if that actually happens. Actually, let's scroll back down while I'm thinking about it. So they have an entire slide dedicated to the shipping delays that they've had. In merchandise sales, the balance of merchandise that had been purchased by users has yet to be shipped. has recently been trending up, mainly due to inadequate coordination with management, with external companies, delays in delivery, blah, 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 right? So basically, again, one of the major problems with any color does seem to be coordination and management and communication. And there's actually another slide I kind of want to point to here to talk about that. But this trend became a prominent earlier in the current period. But yeah, they have seen an uptick, and this is kind of very troubling that they have an increase of about 500 million yen year to year of historical unshipped merchandise that is either backlogged or just they haven't been able to get out the door. That is accounting for a entire physical year. That does not reflect what they currently have sitting in their warehouse, but yeah, you don't want to have 500 million yen sitting in a warehouse that hasn't been shipped because of communication problems. So one of the other slides that this brings me to is it looks like, okay, so I was asked a question here recently. So someone asked me what my opinion was on the current situation involving certain legal matters of a certain VTuber for Any Color Inc. And my response to them it was tactful but also extremely important, because what we have seen with Any Color, and this is a problem, and people constantly lambast me by saying, "Oh, you're just a Any Color stan," and it's not, and no, it's not. 'Cause, I mean, I'm invested in this company, right? This company, I have, I own shares. I expect a certain amount of professionalism and results from a company, right? So, if something that is not going my way, I'm not going to continue talking up a company just because I've invested in them. No, I'm going to be critical on the company because I'm invested into them, right? So, one of the biggest things I have seen, and it's been a recurring theme with Any Color and a little bit with Cover, but I think Cover is probably a little bit better at this, right? Is the fact that there definitely seems to be a communication structural issue between the talent to the manager to corporate to administration, so on and so forth, right? They hold tons of meetings every single day, so you would think that because you have all these meetings that are happening, that communication wouldn't necessarily be a problem, but it is. And what we've seen from Any Color, and partly to their credit, but also partly to their weakness as well, is that it does look like they are trying to put in a bit of a roadmap into realigning what they're trying to do and what they want to see from management down, in in this case production division down, from administrative, down to the bottom person. It looks like they're at least trying to define these roles better. And one of the biggest arguments I have seen, and again, this is against, it's not just against Any Color. I've also seen these comments on job review boards for Cover Corporation as well, is that there number one seems to be a lack of communication in many aspects, because people have a line drawn in the sand and say, no, you're production, we don't want to talk to you. You have to go through this channel to talk to us, and then you have, your person that is working with the VTuber. You have your talent manager. Your talent manager is bouncing back and forth between the production crew and maybe the technical support crew, because the technical support crew doesn't want to talk to the other crew because they want the manager to be the one that everyone goes through. There is such kind of like, people are so busy trying to run around trying to get people to talk to each other that nothing gets done. And you don't want that to happen. It should not happen that way. There should be a structure and a chain of communication that does happen, but you have to have that chain defined. And part of the other reason why the chain has not been defined with any color is because I have seen other people mention it, and I completely agree with it, that there is a high turnover rate when it comes to auxiliary and non-talent employees, both with any color and cover core, because they both have an average employee retention rate of roughly 2 years. That's it. And this is for both any color and cover core. And so you have people work for a company for 2 years and then move on, right? But most of the time when those people get hired and they come in, there is no standard operating procedure. There's no, they get a general outline of what their responsibilities are, but they get no practical either training or experience of actually doing those processes with someone who knows what the processes should be. So they spend that entire first year trying to figure out their job. And it's not that they're, incapable of doing the job. It's that no one has defined how that job's supposed to be done within the company. And then you end up starting to have all these communication errors because people are like, oh, I don't know, aren't you supposed to be going through so-and-so in order before you get to me? That you get a lot of people that actually say this about both companies. And it's I think that they would have probably a higher retention rate if it wasn't for the fact that you're basically doing on-the-job training for that first entire year. And then by the end of the second year, you're so tired from working on this stuff that you finally have figured out that you say, I'm just going to go to an easier job. Right. And the worst part of it is when you have people like this and you have a turnover rate like this with your employees, is that person finally figures out how they do their job. Right. But they, it's all in their head. And when they leave the company, they don't have it written down anywhere for the next person to read and understand. There's no write-up of how these jobs have been performed. So they walk out with the knowledge because they quit because they want to try to find an easier job or whatever. So the next person comes in and the whole cycle repeats itself. And this is something that we have seen, I have seen working in IT for major corporations as well. When I worked for the hospital for 5 years where I live, I walked in, there was no procedural information on how to do things. I had my hands and fingers into about 18 different systems all trying to work together in a hospital setting and trying to help everyone from a nurse all the way to a doctor to the person that that's in the business office, right? And there was no procedures to follow. There was no, okay, if you're working with this system, this is how you perform this function. That there was nothing. I was thrown into the wolves 3 days after I started. I was lucky to finish 5 years there. But that's the same thing that we're seeing with VTuber companies as well. At the end of the day, that's what we see with them. And it is very sad because, I mean, like we have on the screen here, they do seem to at least be trying to, to identify and structuralize what they're doing with their company. They're identifying their production group, having we see this a lot with video game companies and developers. You have a first production team, you have production team 2. When Konami was the poster child of video games, they had production teams like that, and that's how Silent Hill came about. Same with Capcom and Square Enix, so on and so forth. Right, and they're actually trying. It looks like they're at least trying to structure their company in a better way, where you have a manager, work with their VTuber, when they're debuting, to build kind of a rapport, that kind of thing. A project design and operation group. It looks like they're trying to, at least identify these things, right? Where is... and the same thing is happening with the merchandise, and honestly, if they're able to get this process down better, along with their shipping problems, that their merchandise revenue would probably be enormously higher. So I did see that they are trying to bring more of this in-house, just like how Covercore did. So hopefully they're able to get more of this in-house, so that there isn't so much miscommunication. But you do have your IP marketing group. You do have your MD planning section, your merchandising, manufacturing section, the sales area, the marketing area, all this stuff. So it does look like they're trying to at least build their structure better, to show that they are at least more organized when it comes to this kind of thing. I think that about covers everything else. There was quite a bit of other stuff here that I did want to talk about, like Cager here and Growth Cager, and helping people understand what they're trying to display here. But I'm probably gonna do that more in a video, because that way I can actually splice it. Splice in a lot more of the explanation here, as opposed to trying to talk about live. So it still amazes me though that the gender ratio of male to female is still 68 to 32%. I honestly thought it would be the other way around, because guys tend to frequent this type of genre more than girls. But this also accounts for just how much anime and VTuber culture is now embedded with today's youth and young adults here, with having almost a 3-to-1 ratio here. That's huge. And that also explains why, in a lot of ways, that the Sync the Otter people just have not been able to completely affect anybody outside of the English speaking audience, because they don't want to listen to it. Um, and you have 78% of your viewership, anywhere from the age of 29 down to teenage years. I mean, they're not going to listen to the English speaking people. They're not going to care, So, but yeah. So, all right. Well, I am going to call it a night here then. And I may also release either an edited version down, or maybe even a slightly different video for a quick review other than the live stream that I did here. I really just wanted to do the live stream because I had not been online that long, for quite a while, and I did want to see why what the results were while talking about them, and have the have the actual chart up here as well while talking about them, because I still have to shake my head when I see, when I saw Lydia, sitting there, and she had this tiny, little chart there, and she's like, look at this little line here, it's going down. Yep, it's done. They're done. They're failing. And it was just this little line that barely encompassed more than an hour or two of the market being open. So, but so what I'm gonna do then is that I am going to look to create a either an edited down version of this video, or do a full edited review of this video, utilizing the same materials that we talked about tonight, but also I am also looking at the calendar ahead, and I do have a few commitments out there that I need to take care of, but hopefully I'll be able to return back to also gaming and streaming, because I just have so many games that I want to play, and games I haven't been able to finish that I want to finish. So we will try to do a gaming and this kind of a chill and vibe type of stream here later on. But at least for now, I am going to go ahead and call it a day. You guys, thank you so much for coming in. Lurkers, I've seen several lurkers come in and out. Thank you so much for coming, and you don't have to talk in my chat to be appreciated. I appreciate you all. It's been a minute since I had last live stream, so I also consider this to be kind of my get back into the environment stream again. So Sai, thank you so much for dropping in. Umberto, thank you so much for dropping in. I know there has been at least 27 other people that have dropped in here. Thank you guys as well. I really appreciate you guys coming in, checking me out, putting up with me talking about financial stuff. I know it's not everyone's cup of tea, but hey, it's something that I at least enjoy doing it as a hobby. And again, I'm not a I'm not a professional by any stretch of the means. However, I am capable of learning and then applying what I'm learning. So that's kind of where I'm at on this stuff. Please do your homework if you're looking at doing investing. It's, if you are not in the Japanese market, it's already a little bit that it's that much harder for you to invest in the Japanese market. So do your homework. Pay attention to how to bring about your own conclusions, and seek help and professional advice if you are considering on investing in any way, shape, or form. All right. So other than that, guys, thank you so much for tonight. It feels great to be back. We'll talk to you again real soon. Until next time, have a good morning, afternoon, or evening, whatever the case may be for you. This is Marko Yamashita signing off. Peace.
You gotta take control. Life's too short.